Hi everyone, so welcome to the live stream today. Very much excited for having you on our fourth session on how you can revise and pass the exams once. In case you missed the part one, the part two, and the part three, I'm going to leave it in the description to this video for you to get access to and watch. And today I want to share with you some critical issues that you need to understand, because today we had a forum with the chief examiners for all of the 14 papers. For all the 14 papers, we have the chief examiners coming on and sharing with us the things that we need to know about each of the papers and how students can position themselves to pass the exams. So I want to share some thought with you again from the perspective of the examiner for some of the subjects, and also provide you with some assistance in how you can study these subjects and, most importantly, pass them. And I see some of you guys coming on YouTube and on Facebook. Give us a thumbs up on the video when you join, and then click the share button to also share the video with others. Let us reach as many students as possible watching the stream, and let's see if we can get a lot of people coming on. Sami's vlog, I see you. You are welcome to the stream. So let me share my screen with you real quick, and then let's get into the discussion. Remember, this is a Q&A session, so if you have any questions, put them in the chat box. I want to answer any questions that you are having as we continue with our discussion for the exams. Today, I want to provide you with some strategies. So let me share my screen with you first so we get going. Okay, so my screen is up for you. Yesterday, we shared some thoughts. Want to make sure that I open that up real quick for you. Okay. Mensa Amos on Facebook, I see you. You are welcome to the stream. So if there are any questions, you put it in the chat for me, and let me answer for you. We've shared our thoughts, or I've shared my thoughts on how you need to prepare to pass the financial reporting exams, the management accounting exams, the financial management exams, and also how you can prepare and pass so financial reporting, financial management, management accounting, public sector accounting and finance. And today I want to share with you some thoughts on the other subjects. Like I said, also, we had a meeting with the chief examiners for all the 14 papers, and it goes back to the issues that I've always be sharing with you about why students fail the exams. So you want to make sure that as you're going into the exam hall, you spend time to really study well to understand a number of things very well. So let me touch on corporate reporting real quick, how to learn and prepare for the corporate reporting examination. The first thing we need to understand about corporate reporting is the structure of the exams. The structure of the exams. Now, our exam for the corporate reporting is going to be in this way. We're going to have a question one on the consolidated financial statements. Consolidated financial statement. We're going to have question two on the standards. So the accounting standards coming in. Then we're going to have question three coming in with corporate restructuring and financial reorganization, or business valuation coming in. Question 4 could be on evaluation of financial statements and ratios. Evaluation of financial statements and ratios. Then question 5 will be on issues like ethics, conceptual framework, and regulatory framework. And then some other issues like integrated reporting, and some other issues that the examiner feel excited about to be bringing on board in relation to that. So this is the structure of our corporate reporting examination. How then do we position ourselves to actually pass the corporate reporting examination? How do we position ourselves? Very simple, very simple. One thing you must understand is that the chief examiner has made it clear that in corporate reporting, 30% is going to be dedicated always to the interpretation, the accounting standards. So the IASs and then the IFRSs. So it is very, very critical that as you are studying for corporate reporting, you are strong in the accounting standards, because it is one of the challenges for a lot of students in that case. It's one of the challenges for a lot of students in that case. Now, I see some of you guys joining on. You are welcome to the stream. Comment in the chat box with any questions you have for me. There's a Q&A. So whatever top subject you are doing, you can put it in the chat box and I'm going to share my thought on it. So we're going to have a 30-mark question coming in on the standards. Now, this is where it becomes crucial, because you're going to be looking at the accounting standards in level 2 financial reporting, then the level 3 exclusive standards as well in that case. Now, how do you approach this in the exam hall? Like I've told you before, you want to make sure you stay away from the consolidated financial statements in the exam hall. Build your knowledge very well in corporate reporting and make sure that you approach the question 5 first. Or now, the positioning of the questions could vary. Okay, these are not fixed always. So the positioning of the questions could vary in relation to that. Now, one thing you must understand is that, so you go to the theory area with a question 5, the ethic question. Now, the ethic question is very, very strategic. It's very, very technical. And maybe one of these days we will go through some questions on the ethics, but it's something that is critical. It's not just about regurgitating what you learned to say that the accountant, it's not a person of integrity. No, no, no. You should be able to link the ethical issues with the case study that has been provided to you, and that is very, very critical in that case. And I'm going to be sharing some thought with you. So you want to go to question 5 or the theory area and answer those theory first. Ratios. Build your muscles well on ratios and understand that very well. The standards, very, very critical. Build your knowledge on that. Then between business valuation and corporate restructuring, one of them will be in the exam, or we've not seen the examiner bring in the two in an examination sitting, but who knows, maybe this semester he could do that. So you need to make sure you understand that. So before you approach consolidated financial statement, all other things being equal, you've done about 80%. You've done about 80%. So you want to make sure that the reason why I said you don't approach the console question first is because of the fact that it's going to require a lot of time when doing the consolidated financial statement, because this is a complex group structure. Maybe you are dealing with foreign subsidiary, or you are dealing with a consolidated cash flow statement, or you are dealing with multiple subsidiaries and an associate, so, or sub-subsidiary and an associate. So the workings is going to be really tough here. That is why you want to make sure that you stay away from the consolidated financial statement. So in the exam hall, that is how I want you to approach the exams when it comes to the consolidated financial statements in that case. Now, I see some questions coming in on YouTube as well as on Facebook. Let me pick them up real quick and answer them for you. Now, if you are watching or you just joined, give us a thumbs up on the videos, share the video as well. Let us reach as many students as possible. In case you've not subscribed to the channel also, make sure you subscribe to the channel, because, hey, we want to build a community and make sure that we get to 100,000 subscribers in the near future. If that is going to take us a year or 2 years, whatever be the case. We want to build the community as large as possible. So you make sure you subscribe and click on the bell notification icon. Mensa Amos on Facebook. Rita Opoku, I see your question. I'll be coming in for you in a moment, so stay with me. Mensa Amos on Facebook said, please, I'm learning on my own. How will I pass my business law in ICA level 1? I mean, how will I answer them? Mensa Amos, that is not a good decision to make. Okay? It's not good to learn on your own. And it's one of the issues that came up today during the during a forum we had with the chief examiners for all the subjects, that many students feel unprepared and they don't pass the exam because they are learning on their own and they are not attending lectures. So Amos, I don't know why you're not attending lectures, but it's not a good thing. Because you see, when you attend lectures, all other things being equal, your lecturer is going to provide you with the blueprints, the areas that you have to focus on in order to increase your chances of passing the exams. But to provide you with some blueprints, number one, when it comes to business law, make sure that you understand the company's code, because that covers about, is it 30% of the syllables or so? Please let me confirm that slide from the examiner's statement that was made. That is about 55% of the syllabus. So get the company's code, the new company's code. Okay, the new company's code. About 55% of the questions in the exam hall will be coming from the new, relates to companies. So even with the company's code alone, you can understand a lot of things. Then there will be questions on the law of contracts. There will be questions on agency. There will be questions on contract of sale of goods. What you want to do is that you must make sure that when the case is given to you, you are linking what you studied with the case. So for instance, if you're looking at something like elements of a valid contract and there is a case that is given to you, you want to make sure that you are not talking about acceptance, offer, legality, consideration. You're not just rawly just writing out that, but linking it to the case study that has been provided to you. So Amos, make sure you get the company's code, construction and law of contracts, the agency law, sale of goods. There'll be questions on these things in that case. Then some issues about partnership, it's also going to be there in that case. As to how to answer the question, that is what I said. Make sure you are linking what you are learning with whatever case study that is given to you. And because it's a written paper, work on grammar. Okay, English, your handwriting, your sentences, your punctuations and everything. One of the things that came up today as well, when we had a forum with the chief examiners, was that many students take the WhatsApp English into the exam hall. You are writing professional exam and people cannot express themselves very well. Okay, because you speak something that looks like English, that sounds like English, but that is not what you're supposed to write in the exam hall. So because business law is a written subject, and by extension, this goes to those of you doing management accounting, those of you doing advanced audit and assurance, public sector, accounting and finance, you want to make sure that you work on your grammar, you work on your tenses, you work on everything about the English language, and most importantly, you make sure that you also include examples. If it is possible that you are explaining a point that you can't really get it across well, the chief examiners have indicated that providing examples relevant to what you are explaining give a clarity on your explanation that you are giving. So providing an illustration on an example will be a critical thing that can assist you in relation to that. So let's say you are explaining the law of contract and you are explaining the elements of a valid contract, and one of the elements of the valid contract is legality, which means that a person must be of a legal age to enter into a contract. And you are talking about the legal age being 18 years, and so that a minor cannot enter into contract, but a minor can enter into contract of necessities. So maybe you cannot really write much or explain it well. You can just put an illustration up. For example, If Kofi is 5 years old, Kofi is 13 years old, Kofi cannot enter into contracts to say buy shares, or cannot enter into contract to go and acquire a television set, a 55-inch television set, because it is not necessary for him. However, Kofi can enter into contract to buy food. Kofi can enter into contract to become an apprentice for for a person and make the payments later on in the future. So that is the thing you need to understand about how you go about business law. But Mensa Amos, like I said, it's not good to do self-study. It's better to have to attend lectures so that you'll be assisted better, because some of these things I'm saying in class, we dive into it more deeper, and I share my thoughts on that deeper level in relation to that. So let's go on. So Amos Mensa, let me know if that makes sense for you, and I have answered your question for you. Rita Opoku said, how do you calculate the basic salary of on September 1, 2013? He was dismissed on October, and it is assumed that the year in calculating the basic salary should be this. That will be for me to solve all of these things for you. Because the salary scale concept goes by the fact that what it means is that the first year that he was employed, he will be making a salary of 18,000. The second year, you add 1,002 to it, so you make a salary of 19,200. The third year, you add 1,002 to it again, so that he makes a salary of 20,400. The fourth year, 21,600. You do it in that order. So this is for each year of assessment. So it started on 1st September. So if September, then the first year will be ending in, I think, October. So 1st September 2013 to 31st October 2014. That will be the first year. So you do the calculation for that up to the 2018 that he said you are having, then you do the computation in that case. So that is what you need to understand about how the computation is done. Time will not allow me to go through all of the 2018 that we have here, but that is how you do it. So the second year is 1st September 2014 to 31st October 2015. So it follows in that order, so that you will now be able to get the workings for each year, and then you'll be able to do the computation for that particular year in relation to that. So Rita Opoku, that is the guide that you follow in order for you to calculate the basic salary. Amos Mensah on Facebook said, thanks a lot for your help. You're welcome. Penny Perry said, good evening, said, listening attentively, said, okay. Kese Kwekuban said, Mr. Nhyira, for someone who wants to work in the public sector, would you advise taking ACC or ICAG? No, if you want to work in the public sector, ICAG for sure, okay? Yeah, once you're in the public sector, because it depends on what you want to really do in the public sector, but if you want to be an accountant in the public sector, or work with a controller accountant general, or be an accountant in an MD or MMD or whatever it is, definitely ICAG is the way to go in that case. ICAG is the way to go in that case. And even after the ICAG, you could convert it into the ACCA, take some exemptions, and then you write the rest of the papers. So ICAG will be the way to go. Kese Kweku Ban, that is what I would say there. Okay, so Toby said, good evening, good evening, Toby. How are you doing? I see some of you guys joining. Put in the comment box any questions you have for me. Timothy Ahas, I think you were providing an answer to Rita Opoku, but you have deleted your message. Maybe you find out that you were wrong. So Rita said, okay, thanks. Trying to see if I arrive at the possible answers provided. All right. So that is it about that. Any other questions, you put it in the chat for me. on YouTube. Then you put it in the comment box also on Facebook. I'm reading all of your comments and will reply to all of them. So about corporate reporting, that is what you need to understand in order for you to pass the corporate reporting. So then how do you revise the corporate reporting? How do you revise? The way you revise corporate reporting is to structure your study in such a manner as follows. So number one, you know that ethics, it's critical. So you make sure that you understand ethics and understand the principles and then know how to connect them. Spend some time to understand the conceptual framework and regulatory framework as well. That is very, very critical there because there will be questions coming in from these areas. Minimum of, about 6 to 10 mark question will be on ethics in the exam hall in that case. So once you finish with these guys and then integrated reporting, depending on how excited the examiner is, we could have something coming in from integrated reporting where the organization is incorporating both environmental performance or the impact of the entity's operations on the environment as well as others in that case. So that will be the issue in relation to that. Okay, Moses Kwam is saying something. For solution to Rita Opoku's question, I think the year starts from 1st September to 31st August. Okay, I think that will be true. So let's see, September, October, November, December, January, February, March, April, May, June, July, August. That is true. That is true. Thank you, Moses. So it should be August rather, because we have August, September. So if 1st September, then August. Okay, that is very true. Thank you for that. Then after you deal with the ethics and the conceptual framework issues, then you come to the issue with the accounting standards. So IFRSs, IASs, remember this is going to be 30% in the exam hall. Like I tell you guys all the time, if I know something is a done deal and it is definitely going to be examined in the exam hall, I will spend my time on it. So spend time to understand the accounting standards. Now remember there are the basic accounting standards that you need to know about. Number one of that is IFRS 9, financial instruments. These are basic account. This is a basic accounting standard. 99.9% of the time there will be questioned in the exam or on the financial instruments. And I understand that it's one of the standards that students are struggling with. But financial instruments really easy. But spend time to understand the principles about financial instruments. Whether I like it or not, there's a question waiting for you 99.9% of the time, IFRS 9. That is critical. Aside that, you want to make sure that you spend time to look at the other accounting standards relating to non-current assets. Because one thing that I can also guarantee you is that 99.9% of the time, at least two of the non-current asset accounting standards are going to be in the exam hall. Now, when we say non-current asset accounting standards, we mean IAS 12. We mean IAS 20, government grants. We mean IAS 23, borrowing costs. We mean IAS 40, investment property. We mean IFRS 5, non-current asset held for sale and discontinued operation. Whether I like it or not, maybe if depending on how excited the examiner is, at least two out of these, either the examiner will ask you that definitely, or it will be in the consolidated financial statement. Remember that you see, each footnote in the consolidated financial statement is actually an accounting standard as well that you must know how to treat very well in relation to that. And please note that at this level, when the examiner is asking you about the accounting standards, as you are learning them, know the following things about the accounting standards. Number one, the recognition criteria. Make sure that every standard you pick off head, you know the recognition criteria. Number two, the initial measurements. Very, very critical. You want to make sure that you understand how to initially measure or determine the value when it comes to things like IAS 16 property. Did I mention IAS 16 under the non-current assets? I think I didn't. It should be part of it. How can I forget that boy? He's very handsome and it will be there for us. So the initial measurement, number 2. The next one will be subsequent measurements. And then the fourth one will be the disclosure requirements. Because sometimes the examiner can ask you a theory area about the disclosure, about the standard, or the subsequent measurement of an item in the financial statement. And please note, learn how to apply the accounting standards. When I say know about the standards, I don't mean chew baba about the recognition criteria. No, if you take something like IAS 37, provisions, contingent liabilities, and contingent assets, you realize that the recognition criteria play a key role when it comes to the whole standard. Because number 1, we said that if it is rotten, then you provide for it. Rot simply means ROT. So R means the amount should be reliably estimated. O means there has to be present obligation. Now that present obligation could either be legal or contractual. So it plays a key role. You must know how that applies for the initial recognition of provisions, contingent liabilities, and contingent assets in relation to that. So that is something that you need to understand when it comes to dealing with the issue in that case. So know these and learn how to apply them. So IFRS 9 critical, non-current asset standards critical. Then there are, because we are in corporate reporting, there are some standards in level 3 corporate reporting that we need to look out for very well in relation to that, which is IFRS 2. I think that's share-based payments, if my memory serves me right. And then IAS 19, employees benefit. Please note that when you're doing IFRS 2 share-based payments, there is an IAS 12 component in there, deferred tax. And you want to make sure that you understand that aspect also, because that is where the examiner could be excited about to drill you, especially at this level. And for the past examination sittings, we've not really seen the examiner bringing questions on these guys. So who knows, maybe this semester you'll be excited about visiting that area in that case. Then we have the other standards that you need to really pay attention to at this level. That is going to be the IFRS 16 leases, IFRS 15 revenue from contract with customers. I cannot tell you the importance of that standard. IFRS 15 revenue from contract with customers. You want to make sure that you pay close attention to that standard the way you pay close attention to the IFRS 9, the financial instrument, because I don't know how excited the examiner is going to be in this examination sitting, but he may visit there for you in that case. So you want to make sure you understand that also. Then aside that, the other standards, IAS 37, IAS 38, IAS 36, you should know the principles in that case. Now, the standards are numerous. We have the 33 earnings per share and all those gymnastics coming in there. But what I'm trying to say is that you must know the standards, because 30% will come in. What it means is that you will have questions on 5 standards, all other things being equal. The question 2, which is the standards, all other things being equal, will be on 5 standards. And this is what I'm telling you. Out of the 5 standards, all other things being equal, 1 of them will be on financial instruments. So remaining 4. The 4 that is remaining, you are likely to have 2 of them coming from the non-current asset standards that I listed. The other 2 that is left could come from anywhere. And then the question 5 aspect, where I told you there will be theory also, the examiner could bring another standard in there, which is the other standards coming in. So yes, I understand that we have numerous standards, but we're going to see about 7 or 8 of them in the exam hall. But you want to make sure that you build solid knowledge, solid understanding in these. And don't learn the standards also in isolation, because they are interconnected. That you see that you are doing share-based payments, but there is IAS 12 there. You will be doing IFRS 9 financial instrument, or IFRS 15 revenue from contract to customers, but you see that there will be IAS 37 coming in when you're dealing with onerous contracts or onerous contracts, depending on the school you attended and the teacher who taught you how to pronounce words, onerous or onerous, whatever it is. So the standards are interconnected. So don't learn them in isolation, know how they are connected. When you are learning IAS 19, for instance, employee benefits, there is an IAS 37 component coming in because you have to make provision for liability. Then there is an element of financial instruments coming in there, how we account for assets, because you are going to be dealing with the actuary gain or actuarial gain or actuarial losses in relation to that. So learn the standards in isolation and understand the principles in that case. Now, after you understand the principles, then you can now begin to practice questions. Please, don't solve questions until you are solid on the standards. Now, somebody will ask, Nhyira, how do I know I'm solid? You know you are solid when you pick a question and you can say that this is the standard, and you know the rule in the standard you need to apply, because it is about application. It's about application. So it's one thing to chew baba on the standards, but it's another thing to apply. If you read a question and you read a footnote and you know that, oh, this is IAS 37. Okay, how is the question being asked? Is it an environmental cost? Is it a court case that I have to deal with contingent asset or contingent liability? When you get to that level, that means you are understanding what you're doing. But it's one thing to also identify the standard, it's another thing to actually solve the question in that case. But hey, if you understand the principle and you spend time practicing questions, you'll be in a better position to be able to pass the corporate reporting examination in that case. You'll be in a better position to pass the corporate reporting exams in that case. I'm seeing some comments coming in here. Rita Opoku said, I've computed the question, but my answer isn't in the possible answers. I think the issue is with the 40. Okay, let me go back to the question. He said, and it is assumed that the year in calculating the basic salary should be 48 weeks. Okay, so if we are assuming the year, what year of assessment are you calculating? I don't even know the year of assessment. He started the work in 2018. So which year of assessment are you calculating for? So that if we know the basic salary for that year, then you can work in weeks. Because like I illustrated to you here, where is that? Let me go back to the things that I was showing you here. Was it here? Yeah. So like I illustrated to you here, I think it was dismissed in 2018. So which year of assessment are you computing for? Probably if I get a year of assessment we are computing for, I can provide you with some blueprint in there. Because if we assume there are 48 weeks in that particular year, and the person was dismissed somewhere in October 2018, which year are we calculating for? You must know the year of assessment. Okay, you said 2018 year of assessment. Okay, so if 2018, what is the 2018's basic salary? 2018 is going to be 2017 and 2018, the middle. So if that year of assessment is 48 weeks, one is going to be in the previous year, the other is going to be in another year. Because remember, he started work on 1st September. So when you do these schedule workings, you're going to have 2 periods. So the 2 periods you have, if you are dealing with 48 weeks, then you have to know how many weeks are in the just ended period and how many weeks are in the current period. And you should be able to compute that in that case. I don't have any calculator with me here, so there is no way, even if I try to punch, I will be able to get you the calculation. But like I said, do these schedules. When you do these schedules, because we are dealing with 2018 year of assessment, part will be in 2017 and part will be in 2018. Then, since you are assuming there are 48 weeks in a year, find out how many weeks did you get in the 2017 and then how many weeks did you get in the 2018. Then you will use that as the basis to get the basic salary for the year under consideration. Everlasting Constant said, Ms. Nhyira, please, I think Timothy is asking some questions. Thanks. Where is Timothy's question? Everlasting, Timothy is not asking any questions. He typed a comment and retracted the comment. It's like he deleted the comment, and it was in relation to Rita's question. I think he wrote an answer down and he realized the answer was wrong, so he deleted it. But aside that, I don't see anything coming from Timothy in that case. So back to my corporate reporting statement. So ethics, conceptual framework, integrated reporting, IFRS, we will have 30% there. Make sure you learn the standards very well. But 99.9 financial instrument is there. It's waiting for you. So you better learn it once and for all. Go back. If you're having problem with it, go back and go and learn. I have almost about 4 or 5 videos on the channel on financial instruments. Learn it, solve questions. If you're attending lectures, ask your lecturers questions about it, and they should assist you very well in that case. So once you build a solid knowledge on your standards in that case, then you come to the next slide. Then you come to the next thing, and that is going to be on evaluation of financial statements. I love it a lot. Evaluation of financial statements. This is another done deal area. Last semester, I was surprised because the examiner brought a 20-mark question on this. Actually, he usually makes it 15. But last semester, he brought a 20-mark question on it. And this is a done deal area. So if I were you, I would do everything I can to get maybe 15 out of the 20. I know you will say, Nhyira, how can I get that? But it's possible. Learn how to calculate the ratios. But I am not excited about calculation of the ratios. It's about the interpretation of the ratios. Because some of you, like my own students, when they are writing interpretation of ratios, sometimes I laugh. You hear something like, the ROCE went up, so the company is not performing well, and all manner of things. That's not what we want to hear. Okay, there are things you must understand when it comes to the issue in relation to evaluating financial statements, and you must understand the principles well. So make sure you watch my video on the channel on interpretation of financial statements. I think I did a 2-part video last semester on how to interpret financial statements. I hope it will do you a lot of good. And if you're attending lectures also, definitely your lecturer will provide you some blueprints on how to interpret the financial statement. It's a done deal area. If I was writing corporate reporting in the May 2020 examination, after answering the ethics and conceptual framework question, where I will go to is the ratios. And whether I like it or not, I'm going to position myself in such a way that I should get about 15 over 20 marks. And remember, this is going to be both the ratio and some theory area if the examiner is excited about that. So pay attention to how you interpret the ratios, the ROCE, the asset turnover, the net profit margin. These are integrated. If you're not careful, you will say one thing in another, and you'll come and say the opposite in the other, and you'll be lying, and everything will be wrong. Because if ROCE is going up, but asset turnover is falling, and you're explaining the ROCE and you say, oh, ROCE is going up because the entity is making more revenue, you are lying because asset turnover is falling, which means the entity is not generating as much revenue from its assets as it's supposed to generate. So you got to be careful to learn the intertwined interpretation of those things in that case. And this goes to financial reporting students as well. For those of you writing financial reporting, I mean, this is a done deal area. You don't want to make sure, you want to make sure that you do it very well in that case. So once you build your muscle again on the ratios interpretation, please know that you may be required to write a report. You may be required to write to the shareholders or management. And so again, when you're interpreting your English, your grammar, your spellings, everything in English has to be there. You want to make sure that you stay away from the shorthands writing. Make sure you have a good handwriting. Make sure you don't write too much. Sometimes you end up explaining the thing and it becomes too bulky. You just go straight to the point, keep it simple, keep it neat, keep it nice, and go straight to the point, hit it on the head, straight up in that case. And that is it about that. Once you are done with the ratios in that case, then the next thing that you need to understand will be the issue about corporate restructuring and financial reorganization and his brother, business valuation. Like I said, we've not seen the examiner bringing these in one examination sitting, but who knows? Maybe this semester the examiner could bring 10 questions on corporate restructuring and financial reorganization, and then 10-mark question on business valuation. I would love it. I would love it. So that like students have everything coming in the syllabus. And that is the beauty of corporate reporting. Like you know what is coming, but the structure of the question is what becomes challenging. So you make sure that you spend some time. Corporate restructuring is usually reading aspect. It is the financial reorganization that has some calculation, and you must understand the principles on how we undertake financial reorganization. Unfortunately, we currently don't have any lectures on that on our YouTube channel, but it is part of our paid program on our online portal. But on the YouTube, we don't have content on that. Now, I think business valuation also, I think we don't have any content on that. But going into the future, we can see if we can shoot some content on that or hold some sessions on that to assist you to be able to prepare for the exam. But hey, business valuation, get it down, get the principles, get a concept, solve more questions. Then it is only then that you can start with your consolidated financial statements. Please, one of the things that came up today is that the ICA exams, which you know already, is not an academician exams. It's a professional exams. Now, in academics, you need to get like 80%, 90% to score an A. But in a professional exams, the pass mark is 50%. What does that mean? It means that you don't necessarily have to attempt all questions or try to finish all questions. Because the reality of the matter is this: whether you like it or not, you can't finish all the questions. So that is why I want you to approach the questions the way I am going through with you, especially for corporate reporting. Now, in the consolidated financial statement, in the exam hall, like I said, don't rush to extract any financial statement. Just go in there and do your work in spirit. So learn all the principles about consolidated financial statement. Now, I have done video on consolidated financial statement. In case you missed that session, you should know that. Number one, how to determine the group structure. Number two, determination of the net assets of the subsidiary. Remember, we are dealing with complex group structure here. Now, you will only do that if you are required to prepare the consolidated statement of financial position. If you are not preparing the consolidated statement of financial position, there is no need for you to do the net assets schedule. Then you come to goodwill calculation. Whether you like it or not, 99.9%, there is goodwill calculation in every consolidated question. Whether you are doing the consolidated profit or loss, whether you are doing the consolidated statement of financial position, or you are doing the consolidated cash flow, goodwill is there. And the examiner allocates up to between 1 to 4 marks or 1 to 5 marks on goodwill calculation. So you want to make sure that you know how to determine the fair value of consideration transferred, the fair value of the non-controlling interest, and you know how to deal with impairment in goodwill. Because when it comes to goodwill, there are two things you must understand. We have goodwill at acquisition and goodwill at the reporting date. They are not the same. They are not the same. So goodwill at acquisition is what the goodwill will be on the day that we acquire the business. But if there is an impairment, then the goodwill at the reporting date will be the goodwill at acquisition minus the impairment. And you must know how to do intra-group trading. Whether the companies are selling assets between each other, they are selling goods between each other, when there are goods in transit, when there are cash in transit, reconciliation of the current account, you must know all of these principles. It's broad, it's huge, it's a lot, but you got to make the time available to make it happen. All right, so in the example, don't rush to go and extract financial statement and try to write anything down. Just spend some time, do your workings. Spend some time, do your workings. Spend some time, do your workings. Once you do your workings and you are not able to finish, you should be able, because if you do everything right that I've taught you so far, you realize that you have 80% already booked. Maybe you mess around with the ratio a little bit. Maybe you mess around with some of the standards. Maybe you mess around with some of the ethics, but you have 80%. So the console, you just do some workings about it. You don't rush to go and extract any financial statement. You don't get any mark for the extraction of the financial statement. You get marks for the workings that you're going to be doing. So when it comes to the corporate reporting exams, this is how I want you to structure your revision, and most importantly, structure how you answer the exam. In the exam hall, you are not pleasing anybody. The examiner's report has proven that students do well in answering of the consolidated financial statements, but they fail the exams. Why? Because console, you can do it, but it will require a lot of time. When there is ethics, you can write easily and go away. When there is evaluation of financial statement that if you master, you can do away based on the question structure. When there is standard that you can focus on well and increase your chances of passing the exam. So when it comes to the consolidated financial statement and by extension ratios, these are, corporate reporting, these are the things that you need to understand in relation to that. Any other questions, please put it in the comment box for me, put it in the chat box if you have any other questions. Leonard Muntadi said, good evening, Pro. I have just joined your tutorials. Okay, you are welcome. Moses Kwam said, General, please, why am I General Mosquito now? Please, we need more videos on the business law. Okay, unfortunately, we have some videos on the channel on business law, but not as much as we are supposed to have. So we are seeing there are some content available on business law already. I think we've showed some content on business law. We can see if we can make them available on the channel in the course of the week to the exams or before the exams come in. So we'll see how we'll go about that, Moses Kwam. But I believe that one of the things I want to say is this, and please get this very well. ICA now has better manual. They now have a better manual for the exams. So whether you are doing self-study, which you are not supposed to do, or you are attending lectures, which is what you're supposed to do, you need to get an ICA manual. It's critical. Get a manual and get a question bank. It will help you a lot. It will help you a lot. Now, I know you say, hey, Nhyira, the manual is expensive. The question bank is expensive. You see, do you want to fail the exams and waste another 6 months of your life, or pass the exams and finish this thing and focus on something else in your life? I mean, the manual is whatever. Is it 50 Ghana or 40 Ghana? Even if it is 200 Ghana, you have to buy it. It's not up to 200 Ghana, maybe 40 or 45 cedis, something like that, or 50 Ghana. Buy it. Because the ladies, if you are going to do your hair, how much do you spend? You spend like more than 300, 500 Ghana to go and do your hair. Then the guys too, you can buy a lot of dresses and a lot of shoes that you don't even need. Use them to buy the manual. So please, I will encourage everybody writing the exams to do get a manual, or get a question bank. I mean, they do well that now they like I said, ICA has a better material on almost all the, not almost, like all the subject, they have manual. The public sector manual, like it's a great manual. They have manual on taxation. Get it in addition to whatever book that you're using. It's going to help you a lot for you to be able to really pass the exams in that case. So that is also another thing that I would add to you guys, that hey, as we are revising, make sure you get an ICA question bank, make sure you get a manual, because in the question bank you have a lot of questions that you will solve. And listen, don't think about money in the wrong way. Think about money in the better way. If I can buy a manual that will cost me 200 cedis, and it can help me to pass the exams so that I don't have to fail the exams and come and learn all over again, go and pay registration fee for tuition again, get emotional trauma again. Why wouldn't I do that once and for all? Okay, so you see, the wealthy people don't measure money in terms of the physical money you see, but they measure it in time. If you can do something as fast as possible, that is how you become wealthy. So for those of you who are thinking about the money, ignore the money. Get the book and get a question bank. That is what will help you in order for you to become successful. Leonard said, when do you tackle corporate law and management accounting? I think we did management accounting in the section 2. This is section 4. We did management accounting in section 2. Business law, I tackled that a few moments ago when Mensa Amos asked about it. on Facebook. So maybe I think you joined late. So after the stream, you can watch the playback of the video because I touched on corporate law, what you need to do about corporate law so that you can get that in that case. I mentioned that the company's code is very, very critical because the chief examiner for corporate business law stated that about 55% of whatever it is that is going to be coming in the exam hall is from the company's code. So that is very, very critical in there. And I shared some other thoughts about that. So you want to make sure that you can watch the playback in that case. Everlasting Constant said, good evening, Nhyira. Please, with regards to transnational costs during issuing of shares or debts. I don't understand. No. What are you trying to say? What is transnational cost? Are you talking about transactional costs? And you're saying transnational costs. Please clarify, everlasting constant. I don't know what exactly you're trying to say. So maybe please clarify for me so that I can give you a better answer in that case. And you didn't ask any question. It's like you just made a statement that good evening, Nhyira, please, with regards to transnational costs during issuing of shares. I think you wanted to say transaction costs when you are issuing shares. How do you treat that? I don't know how you want to ask the question. So please help me to answer you better. Clarify your question, everlasting constant, in that case. Right, so that is basically what I want to share with you in this series of how to revise and pass your examination once. And we are seeing throughout April, I'm going to be coming into your way. We're going to be solving questions. I'm going to be doing the revisions with you. And we've been having messages from people asking about our revision masterclass. The issue is that our revision masterclass is not open to the public in relation to that. It's not open to the public. It is strictly for our students. So our revision masterclass are strictly for our students in that case, because it is a time where I spend time with them. And the fun part is we started with our revision 4 weeks ago, or we are in the 5th week. So we've already started with our revision, and now we are just netting everything together and trying to put the pieces together in relation to that. So our revision is not going to be open to the public. It's just for our paid students, people who are learning under my mentorship through our online portal or physically here on campus with us in that case. So that is it. But so our revision session is not open to the public. So for those of you who have been sending us Instagram DM, WhatsApp messages, and SMS, and calling and asking about it, it is not open to the public. So you take note of that. But I'll be coming your way throughout April so that we will go through the issues in that case. Okay, so Everlasting Constant said, transactional cost, the treatment, whether to add or less. Please, it is not about adding or lessing. If an entity is issuing loan notes, that is a financial liability. In accordance with IFRS 9, financial instruments, financial liability should be recognized at fair value less transaction cost. Hence, if they are issuing loan notes, transaction cost should be deducted from the proceeds. It's a principle. So it's not about do we less or we add. Understand the principle. The principle is that as per IFRS 9, when an entity issues a financial liability, or when we are dealing with financial liability, it should be recognized at fair value less transaction cost. That is the principle. That is the principle. So at fair value less transaction cost, that is how we recognize the amount in relation to that. Now, when the entity is issuing shares, for instance, with shares, what is going to be happening is that what is going to be happening is that the transaction cost is usually going to be written off in the P&L account, usually, because when a company issues shares, the shares that they issue, they will be debiting their cash, then they will credit share capital and share premium. So any transaction cost, it's going to be written off in the P&L account in that case. So that is the principle, everlasting consult. Everlasting consult. That is the principle about dealing with the transaction cost. Let me know in the chat box if that is what you were looking for. So please, I don't want you to put in your mind, do we less or we add? Understand the principle. What does the principle say? The principle says that financial liabilities should be initially recognized at fair value less transaction cost. When that rule is in your head, then you are not thinking about add or subtracting. You are thinking about the principle. So any other questions for me real quick? Then the last thing I want to share with you before I sign off for the day, we have management accounting today, and that starts in the next 20 minutes or so, something like that. It's that you need to have a steady plan. And I've said this with you, or I've said this to you over and over again. Have a steady plan. At this point, you must have a steady plan. You cannot learn with your emotions or your feelings. So have a steady plan, and let the steady plan be detailed. So don't just write, oh, Mondays I'll be learning financial reporting. Tuesdays I'll be learning corporate reporting. Wednesday I'll be learning public sector. Don't do timetable like that. Be specific. Monday, 4th March or whatever it is, what am I learning in financial reporting? Maybe I'm learning IAS 2, IAS 8. That's what I'm learning. Okay, Wednesday I have public sector. What are you learning on public sector for this particular Wednesday? Specific. So have a steady plan, and that is going to be very detailed. And you have dates so that you don't just get up and say public sector. What will you learn in public sector? It's huge. And that is where your feelings, so the topics that your feelings aggravate towards, that is a topic you'll be learning over and over and over and over again, and you end up going to fail the exams. So have a detailed, steady plan where you have dates. Then on the dates, whatever subject you have, mention the topic you are covering on that day, on that specific day, and then mention the subtopic you are treating for that specific day. It's very, very critical. That is how we prepare steady plan. You don't just put there financial reporting, financial management, then I have steady plan. Jane, I can't feel steady plan. That's not how we do steady plan. So have a detailed steady plan to help you so that you can cover all aspects of the syllabus. If not, you're going to be learning with your emotions, you're going to be learning with your feelings, and that is what you want to avoid if you want to go and pass the exams. Everlasting Constant said, the principle, no, after determining the equity and the debt component, we share the transaction cost before unwinding. That is the confusion part, boss. Now, what the question you asked and what you are saying now is different. Again, what you just said now is when you are dealing with convertible loan notes. If you are dealing with convertible loan notes, again, transaction costs should be deducted after you get the debt and equity component. That is the principle. So again, it's not about do we add, do we subtract, it's about the principle. That is what I've said, and I keep on saying, spend time to make sure you understand the principle. And one way you make sure you understand the principle is you attend lectures, or you have a good lecturer teaching you, or you watch some of our videos on financial instruments on the channel. It's going to help you. All right, everlasting. So that is just one of the things. So definitely, if it is a convertible loan note we are dealing with, then as per IFRS 9, we are supposed to split it into the debt component and the equity component. And after that, even the debt component, there is a principle that we need to use, that we're going to be discounting the cash flows on the debt using the interest rate of similar bonds without conversion rights. Using interest rate of similar bonds without conversion rights. So that is the thing we're going to be having there in that case. That's the thing you're going to be having there. So once you get that, then you can now deal with the issue cost with that. So the principles the principle. That is the main thing you need to understand in that case. So that's it about that. I'm going to be concluding around here today. From tomorrow, we're going to see if we are going to be picking some specific topics in some specific subjects and start focusing on it. In that case, maybe we could pick consolidated financial statements, solve a question on that. We could pick final accounts in the public sector, accounting and finance, solve a question on that. We could pick management accounting, then variance analysis, solve a question on that. So I'm going to be picking some of the topics selectively, and we're going to solve a question on that. And make sure you follow me on Instagram, because the meeting details or the topic to be covered for each day will be posted on my Instagram page, and you'll be able to get the details and you will join in that regard. So that is it about that, and I'll be concluding around here today. And God willing, tomorrow I'm going to be coming your way at 4:30 p.m. as we continue with our discussion. Note that what we're going to be discussing will be posted on my Instagram page. So in case you're not following me on Instagram, you can follow me on Instagram. The handle is still Nhyira Premium. What you see on my YouTube channel or on the Facebook, the same name. Make sure you follow me on Instagram, because the details will be posted there, and you'll be able to join us in that case. You'll be able to join us in that case. So that's it. Thank you very much for joining me, and thank you very much for continuing to share. In case you've not subscribed to the channel, make sure you subscribe to the channel and click the bell notification icon. That way, when I go live, you'll be the first person to be notified, so you can join us on the live stream. Till we meet again tomorrow, you stay safe and you stay blessed. Bye-bye.